Good morning, everyone.
Good morning. It's raining today, but thank you very much for your participation. We have so many participants. So now we are going to start this meeting co-organized by AIGCC and then ClientEarth and supported by S&P Global focusing on greenwashing. So I'm Hana Heineken from ClientEarth. I'm going to be your master of ceremony today. So we provide simultaneous interpretation today, and you can see the channel here. Channel 1 is Japanese and channel 2 is English. So please use the simultaneous interpretation. We also provide the coffee, tea, and vegetarian bento box. So please feel free to it. So first of all, I'd like to call upon Ms. Rebecca Mikla-Wright, CEO of Investor Group on Climate Change and Asia Investor Group on Climate Change for welcome remarks.
私の名前はレベッカ
Good morning. I'm Rebecca Mikla-Wright, but now I'm going to speak in English.
Good morning. Thank you so much for getting up so early and coming to this event in a very busy week, PRI in Japan. It's really lovely to see you all here. I am the CEO of the Asia Investor Group on Climate Change and also the CEO of the Investor Group on Climate Change that covers Australia and New Zealand. Welcome to this event for our Greenwashing Guide and the launch of the Japanese translation of this guide. We actually released the English version of this guide several months ago, but this is our first in-person event. So very pleased to be having this in Japan. And we did have a lot of demand after the release of the report, a lot of interest from investors, regulators across the region. So really looking forward to the discussions here today. Also wanted to thank S&P Global for supporting this event today, a member of ours and a very important partner for today's event. So we have some very important speakers here to discuss the report and the implications of greenwashing. Wanted to have Satoshi Ikeda-san, the Chief Sustainable Finance Officer for the Financial Services Agency, who I'm sure you all know well, to give some opening remarks. And then, of course, we'll hear from ClientEarth to introduce the guide with a short presentation. And then we have the panelists who will discuss the guide in more detail. So for those of you who may not be familiar with AIGCC, we are an investor industry association with over 70 investors from across the investment value chain, pension and government funds, investment managers, and all the very important members of the investment value chain. And we really connect and support investors to be active in their journey towards net zero economies globally. We cover 11 markets in Asia and have 20 staff now across the region, including here in Tokyo. So the main pieces of our work are investor practice, supporting investors, as I mentioned, corporate engagement with companies across the region, and also engaging with policymakers and regulators on these issues so that we can really achieve real-world impact to address the risks and opportunities that climate change presents. In terms of our views on greenwashing, just some insights. So in the Australian context, the Senate in Australia earlier announced an inquiry into greenwashing across the economy, which may even lead to even stronger regulation. We're seeing quite strong crackdowns from our regulator in Australia on corporates and investors. So greenwashing is very much on the minds of investors and all actors in the economy in the Australian market. South Korea has a draft anti-greenwashing bill expected to pass into legislation this year. And you'll hear more, obviously, how greenwashing is being addressed across the region through the panel. So greenwashing is, I'm going to sort of wrap up my comments, but greenwashing is a really tricky space to manoeuvre, and I'm very glad to be having this conversation today and the conversations that you will have on how you are looking to navigate this issue. And I hope the report provides you with, really some tools to think about your actions and the actions, with the companies you engage with, on how you can navigate this space. So I'm going to hand over to, the experts to talk more about the report and let you listen to them. Thank you. So I'm going to hand over now to Dr. Richard Mattison, who's the Vice Chair, S&P Global Sustainable One, just to say a few words. Thank you, Richard.
Thank you so much, Rebecca. It's so exciting to be here today in such a full room, and I don't even think it's 8 o'clock yet. So thank you all for coming. So I wanted to talk a little bit first about transition, because I think transition is a very complicated topic, and some of the elements of how we think about transition lead to challenges when we talk about greenwashing. So I wanted to talk about transition first. The world has experienced many, many macro trends that have driven significant wealth generation over the decades. You think about the 50s and 60s and globalization. You think about the trend for infrastructure investments leading to a new asset class, the technology boom and bubble and bust and now boom again, generative AI today, peak earnings for Gen Z. All of these are investment megatrends. But I think one of the most exciting and largest investment megatrends has to be this thematic of the transition to a low-carbon, sustainable, and equitable future. It's going to span decades, it's going to be complicated, and it's going to involve trillions of dollars of investment. And so that's exciting. I think, as an investor, I'm very excited to identify opportunities in that trillions of dollars of shift of a global economy. This is the first time the world has tried to do this. An industrial revolution is a revolution. It's messy. What we're looking at is a transition that is an evolution. And we want it to be smooth. It's probably not going to be smooth, but that is the desire. But we have a set of goals that we're aiming for, and those goals are clear. So this is the first time there was no established goal for the technology boom, other than winning in the technology boom. So I think we have a huge opportunity. But the transition is going to be complicated, and it's multifaceted and multidimensional. Ahead of Climate Week, 2 weeks ago, the International Energy Agency announced that based on today's policies across all of the governments worldwide, even without any new policies, demand for each of the three main fossil fuels, is set to hit a peak by 2030. So that's the first time that a peak has actually been visible for each of the fuels in this decade. That's remarkable. You go back 5 years and look at the same organization and those forecasts. It's a huge shift. So what do we think at S&P Global? Well, we have built something called a global integrated energy model. It's based on a bottom-up analysis. It looks at 5,500 companies, mostly energy and oil and gas companies. And it really is seeking to analyze transition in particular with respect to energy. What kind of shift are we going to see? And our analysis would say that we estimate the share of fossil fuels will decline from about 80% today to 58% in 2050. Greenhouse gas emissions will fall by about 25%. And what I want to emphasize here is that is far short of where we need to be. That is a warming pathway of 2.4 degrees Celsius. So actually, that's the trajectory that we're on, is 2.4 degrees Celsius. And that can be a little depressing, but we have a lot of hope, because I think even the introduction of recent policies like the Inflation Reduction Act and GX strategy in Japan will make a huge difference and change that forecast quite significantly. So 3 things to say about this forecast. Global net zero remains out of reach, but we must move urgently. And we think, actually, the second thing is, we think that the projections have improved significantly since the last time we did this, very significantly. And thirdly, public policies are really going to drive the change, as well as capital and the mobilization of the capital markets, and corporate action and innovation. So I just want to emphasize that renewables are the growth the growth story of the coming decade. Climate technology is hugely exciting, and renewable power does grow multifold under every scenario that we have. So really the future is clean, it's green, and it's sustainable. That's the way we view it. But it will be challenging, and what will be challenging in particular is ensuring that we move in that trajectory without greenwashing. We move in that trajectory in a credible way. And so how do we do that? Well, you know, when I was in New York and Singapore last week and in Tokyo this week, I heard from a lot of financial institutions what are some of the problems. And really, it kind of distills down to one critical question, which is how do you identify whether a company or a public policy or an asset that you might be seeking to invest in or a technology is genuinely going to aid in this quest for the transition? How do you identify a transition asset if you're a bank? How do you identify a transition company if you're an asset manager? Because the truth is, transition is the story. That might actually mean emissions rise under certain scenarios before they fall. What you don't want is, though, for those emissions to rise and then continue to rise. And there will be organizations that will be on that trajectory, and there will be other organizations, more forward-looking organizations, that will be on the trajectory of a rise and then a decline. What we're not really seeing is many companies that are on a rapid decline today. So I think we really need layered intelligence to drive this change. And the way we look about this is actually what you need is data. So you need data on a clear analysis of the commitments of organizations to net zero and what does that actually mean? What are the long-term targets? What are the near-term or medium-term targets? You need to understand the emissions trajectory in the real world, not just, for example, at a portfolio level or a loan book level. You need to understand the emissions trajectory in the real world. You need to assess transition plans. What is the strategy? What is the CapEx? What is the OpEx? You need to assess technology pathways. What is the technology pathway for green hydrogen? Well, I can tell you that the Inflation Reduction Act in the United States has brought forward the cost curve reduction in green hydrogen by 5 years. That kind of analysis is critical. You need policy assessment. The Inflation Reduction Act, GX, 150 trillion yen over the next 10 years is a huge and exciting opportunity. And finally, but not least, it needs to be a just and inclusive transition. We need to make sure that we are inclusive of populations in the Global South, for example, inclusive from all aspects, and also inclusive of nature. I'm a member of the TNFD, so I have to mention that nature is critically important and is a twin pillar of our quest to drive improvement on climate change, should also be ensuring that we make improvements from a nature perspective. So all of this is a balance and an opportunity, I would say. But for example, when you're setting near-term targets, the way we think about this is if a near-term target needs to change it. Be brave and be bold and change it. Treat it as an earnings outlook. You wouldn't wait. If you knew your earnings were on the decline or increasing faster than you had previously publicly stated, you should update it and update the market. And we believe that climate change and transition is actually no different. It should be treated in exactly the same way as other financial forward-looking statements. So, transition, I think, is a huge opportunity. It's an investment megatrend, and it's going to improve the lives of pretty much everyone on the planet. So we need to treat it seriously, and I'm really hopeful that we can seize this opportunity. Thank you so much.
Great, thank you so much. Next, I want to turn to our keynote, Mr. Satoshi Ikeda from the Financial Services Agency. Onegaishimasu.
Thank you for the introduction. I'm very glad to be here. And I would like to thank the ClientEarth and the AIGCC for organizing this event on this important topic of greenwashing. Certainly, greenwashing is securities regulators' concern right now. And as Rebecca mentioned, that there's a certain move at the Australia and also some move in South Korea. And Japan is not exception. In terms of addressing greenwashing, we recently released the supervisory guidelines on ESG funds. And it clearly states that the funds who claims the ESG in the investment activities, we said the significant, core component of the fund needs to be ESG related. And fortunately or unfortunately, after the release of that supervisory guideline, or even before, because a market anticipates that incoming regulation, we see quite slowdown of the issuance of ESG funds in Japanese market. That's totally good news because it clearly shows that our regulation addresses a certain concern of greenwashing. But as Richard-san mentioned, that in transitioning to net zero or transitioning to sustainable economy, we need certain financial flows to realize that future. And in that sense, for me, greenwashing challenges can be defined in the way as the certain statistics tells, that in the wordings of statistics, there's a type 1 error and type 2 error. Type 1 error is false, positive. So it detects something, in the case of this context, something greenwashing. But truth which actually not greenwashing. That's false, positive. And type 2 error, it detects something not greenwashing, but which actually is. So we need to balance that kind of needs, that we properly address the true greenwashing, but not to be detrimental to the proper flow of finance to genuinely greening activities. Well, the reason I've said this is, transition is maybe evolution, not revolution, but certainly there are some uncertainties around transitioning to net zero, and certainly maybe there are some entities who wish to green their activities, but maybe short of competencies. And in that case, maybe that entity continue to fail to deliver their pledge. And in that case, at what point it becomes greenwashing? That requires very fine judgment on the side of regulators. And as again Richardson said, we certainly need to emulate what we do in the context of earnings, because there are certain earnings guide and certain earnings projection in 3-year time, earnings plan for the 5 years, 10 years. And if we look at those kind of things in earnings, we do not necessarily say that the 10-year plan must be exactly the same after 10 years. But at a certain point, the 10-year projection becomes certain fraud for the market participants. So I really hope that the report, the translated version, helps us define greenwashing properly. And today's discussion will provide a very profound insights into this very difficult question, but the right question we need to ask for sustainable finance and for achieving the sustainable futures. So thank you for this opportunity and どうもありがとうございます。ちょっと
Thank you very much. So I really tried hard to speak in English. Thank you.
池田さんどうもありがとうございます。
Thank you very much, Ikeda-san. Now, moving on, from the ClientEarth, we are going to have the introduction of the report.
I'm Raphael Soffer. Very nice to be here today to present the report. Minasan, ohayo gozaimasu. I will try to summarize in 8 minutes, 40 pages long report. So I will just give you some insights about what I think are the main points. I think what is... Oh. I'll hold it. So I hope everyone can hear me now. So yes, I will try to summarize very quickly this long report. The main point I want to make first before going into a presentation of greenwashing and some regulatory observations is that we have tried to make a definition of greenwashing and explain which instruments were regulating greenwashing. Very few jurisdictions have a specific instrument specifically regulating greenwashing. There are a number of instruments in each jurisdiction which are trying to grasp this context. So I think what we'll try to do quickly today is first to look at why it's important to look at greenwashing in the finance industry, give a quick definition, and then look at the different types of greenwashing and what regulators are doing about it everywhere. And last, if I still have a minute, the recommendation of the report. So we have 5 pillars which we are giving in order to assess what stakeholders and actors of the finance industry can do in order to avoid partaking in greenwashing. So the issue of greenwashing in the finance industry is that it does have an impact on financial systems. Probably many years ago, people could think of greenwashing as something being innocuous, but it is not. It will result in the misallocation of capital, and it will result in an uneven playing field between companies. And this is because actors in the sustainable finance value chain will be unable to make fair and accurate comparisons among the different types of products claiming to be green. It is also so because the companies which are engaging in greenwashing have actually not incurred the costs associated with greening their products, while the companies which have incurred those costs are at a disadvantage. So overall, we believe at ClientEarth and at AIGCC that it will reduce investor confidence in green products, inhibiting consumer uptake of green products, and it overall will have a systemic impact on green finance. At an individual level, greenwashing also can have an impact on companies which are found guilty of greenwashing. There can be fines from regulators of the jurisdiction. There can be damages if corporations are being sued by their consumers or by their competitors or by their shareholders. And of course, there is the damage to their reputation, which is more hard to quantify, but which is real. So we have tried in the report to come with a definition from greenwashing. I think the one we have here is that it's a false, deceptive, or misleading statement which is made about the nature and extent of the green qualities to protect either the climate or the environment, or at least to have a neutral impact on the climate or the environment, while the product actually is either damaging to the environment or not having a positive impact. What is quite important is that there is absolutely no need for the company to have a deliberate intent to mislead in order for greenwashing to be realized. And I think what we try to do now is to go a bit deeper into the 4 main types of greenwashing. So we have tried to do categorizations in the reports of the different types of greenwashing. So I think there are 2 main concepts of the report. One are the 4 types of greenwashing, and the other one are the 5 main areas of regulation which are used in order to regulate greenwashing. I think we have a very limited time, so I will just remind that there is brand greenwashing, the greenwashing of financial reporting greenwashing, and product greenwashing. An example of brand greenwashing, which many of us will have heard about in the finance industry, is, for instance, there was this major bank which made ads in the UK, which was explaining that it was spending trillion to protect the environment, but the UK advertising authority found that actually it was not sufficient. That the bank had not indicated in its advertisement that there was also some other aspects of its business and that it was not actually Paris aligned. And the authority found that this was a material omission and have asked to remove those advertisements from bus stations in the UK. So this had a reputational impact, obviously, and the bank was actually spending those billions for the transition, but it still had to present the other side of its business, which was not Paris aligned. So that's brand greenwashing, and that's an ever-going danger for institutions. The other one I want to quickly speak about is the financing of greenwashed assets. I think the most obvious one, which we almost don't see anymore now, is very simply for a financial institution to lend monies to a corporation which will use those proceeds for a non-green purpose, even though those monies are being lent for green purposes. So that's the most obvious, which we don't see anymore. But what we can still see is something which is a little bit more tricky, and I think the panel will speak about it, is when a lender is providing corporate financing for a high-emission company, which has some green projects, and the financing are being loaned in order to finance some green projects, but actually the company is still expanding its fossil fuel production, for instance, or still has an increasing project related to fossil fuels, for instance. I think when we continue on the gradation, we can also look at transition finance, where there is a bank providing transition finance to a high-emission company, but the emission path is actually not Paris aligned. So it could also be called greenwashing in that case. So here is a slide for the more visual people, so you can see the different moments in the life of a greenwashing financial product, of a greenwash financial product. So first on the left, it starts by the real economy, where you can see a product or a company which is greenwashing its product, and then a financial institution, either through loans or through a fund, is actually making claims about those products. So either reproducing the claim because it has failed to exercise adequate scrutiny, or because it's adding, you can see on the right, its own green claims. So you can end up with a financial product which actually has been doubly greenwashed. Next frontiers of greenwashing. So I think there are quite a few. We will speak about transition washing in a second. So maybe another one, which is a greenwashing via offsets, which is when a financial product marketed as green is actually wholly reliant on carbon offsets. So in other words, it has actually no real benefit for the climate or the environment. I think on time I have to finish very quickly. So extremely quickly, the point I was making at the beginning, which was about the absence in most jurisdictions of a specific instrument targeting greenwashing. So what we have tried to do is to divide into 5 main parts for the Asian jurisdictions. Where are the regulatory fields where investors should look at in order to find the information in order to avoid any greenwashing. So there is a disclosure and reporting, climate taxonomy, product for labeling, green rating criteria, and net zero integrity. Net zero integrity being this report published by the UN. So, because we're in Japan, and I think Satoshi Ikeda-san already presented very quickly some of the greenwashing regulations applicable to companies issuing securities in Japan. I think here. Yes, so we already had a very quick presentation of the new guidelines, which have been revised this year, which are explaining that any securities issuer which is using the word ESG or green, ESDG, or another similar word in the name of the fund actually has to use ESG as a key factor in the creation and the administration of that fund. Otherwise, this is obviously greenwashing. There have also been the Ministry of Environment of Japan, which has issued guidelines explaining what are the main requirements in the case of issuance of green bond or green loans. And I think we should also salute the Code of Conduct for ESG evaluation in data providers issued by the FSA. Last year, that's a world first, and it's also something which is extremely positive. And I think I'm really late. So we have 5 pillars in the guide. And I would really recommend, in particular, to the investors in the room to look at those 5 pillars. The idea is to take a look at the practices of marketing a financial product from every angle, and to think not only from a regulatory perspective about which rules are applicable to it, but also to think about updating in permanence the review of this product. Something which may have not been greenwashed 5 years ago may today be considered to be greenwashed. Regulations may have evolved, perceptions may have evolved. What is quite important is to look at how different audiences are perceiving a product and a particular green claim. So we have all of those recommendations. It's a few pages long, and I really recommend reading this part in particular. And I think I will stop here because we are extremely late. Thank you so much.
May I ask the panelists to come up to the stage, please? Great, we're gonna start our panel discussion. I'm gonna speak in English, but I think most of the panelists will speak in Japanese. So have your translation, interpretation devices handy. And I wanna pick up on the presentations and facilitate a few questions to the panelists. I want to start with one round of questions for everyone here. We've heard that regulators and financial professionals and legal experts are in general agreement that greenwashing is on the rise, which coincides with the increasing desire for greener products, greener financial products. The report identifies a couple types of greenwashing, and a question for all of you is, what are you most concerned about and why? Maybe I'll start actually with Ikeda-san.
Which type? It's kind of difficult to identify which type. And from the standpoint of regulators, those that are easy to identify are there. If it's the product greenwashing, about that product, it was not really an ESG, but it is labeled as ESG, and we see many such cases. But if you compare the products, then it's easy for you to identify. Of course, some of the products may be more difficult to identify and tricky. And this report says that the brand greenwashing, when you look at the activities of each individual company, you may have some doubts, but in total, the companies may be doing good activities. So in such case, it's very difficult to identify. And I think all type of greenwashing is important. Miyake-san?
ありがとうございます。
Thank you. I do not necessarily come from the financial industry, so I would like to take a look at this question from a wider point of view. And the Ikeda-san talked about the easiness to identify as greenwashing or not. But when it comes to brand greenwashing, I think it's a difficult one. And also, we often see the cases where the TV commercials, there are certain claims. It's not necessarily the financial products, but when it comes to a company, the companies may be making efforts towards that claim. So in such case, how do you define the brand image from those activities? But it's also very difficult if we have to deal with the TV commercials for the public audience, for example. But that doesn't mean that it's okay. But I tend to take a look at this issue from the consumer perspective. So when it comes to involving consumers in this area, I think it's very important. This brand washing type is very important.
Onozuka-san?
Onozuka-san, please, the same question. So I'd like to introduce myself because some people are new to me. So I have been an institutional investor in the past 20 years, and I am independent right now, providing advice to companies and listed companies and unlisted companies. I am a board member of many such companies. Therefore, I take a look at this issue from a variety of perspectives. So yes, it is a very difficult question, but when it comes to financial products, and I am the external director of asset management company, so in terms of financial product greenwash, I think this is, yes, if I am to pick just one, yes, the highest concern is on financial product greenwash, because financial institutions, if there is a greenwash, this means that there is a momentum for green finance. So green finance is progressing. Therefore, we would like to maintain this momentum. This means that we have to understand the fiduciary duty, and then based on that, they need to manage. That way, therefore, financial institution greenwash, and also the way they go through the process, and what is the philosophy of such company, and then what about the labeling of such financial product, and what about the investment judgment. I think these are all very important. Therefore, I would like to, yes, dig deeper on this topic later on.
Well,
good morning. Well, at this point in time, I would say that climate change information disclosure greenwash is what I am looking at. So disclosed GHG emissions, that's not correct, or disclosure being insufficient. And financed emission, financial institutions say that they are actually working on that, but they are actually making investment into fossil fuel projects, and they are not avoiding the risks of loans and investments in such fossil fuel projects. And right now, climate change disclosure, we now have standards. We don't necessarily have standards for climate disclosure. Therefore, the disclosed information may differ from company to company. In securities reports, sustainability information now needs to be incorporated, and that now has to be incorporated. But as of now, as for climate change actions, the actual contents that are to be disclosed, they are not really standardized. And for the last fiscal year, 2022, a disclosure started, but big financial institutions, if you look at the climate information disclosure in terms of GHG emissions, some of those big corporations are not really showing any targets and any actual emission numbers. And scope 1, 2 may be covered, but finance emissions are not. Others also cover financed emissions. So if you look at those integrated reports or financial reports, they are required. So if there are some false information, there is a legal liability there. And the hurdle for the litigation, damage litigation hurdle is quite low for such false information. We haven't seen such cases yet in Japan, but overseas, New York City, ExxonMobil being sued by New York City. So there are certain legal cases there already. And NGOs, they may bring the court cases or try and raise some social awareness through the litigation. So I think there is a risk for the companies.
I wanted to ask Onozuka-san if you could elaborate on what could be the root cause of greenwashing for financial firms. Are they trying to please different audiences? What's going on?
ありがとうございます。different audience っていうのは絶対あると思いますね。で、やっぱり
I think so. Yeah, they are trying to please different audiences. I have been in asset management industry for a long time. So how to increase the asset and also a remuneration or fee corporation, it's not easy to accumulate the fee. Fee by asset, that is the profit, therefore trendy products and catchy labeling to increase the asset volume overall. That can work as an incentive for financial institutions. So such force is at play. And as has been mentioned in the report, what is being tested is integrity of such corporation. Corporations are established under different philosophy or purpose. And becoming super green alone is not the ultimate purpose of a company. When it comes to a financial institution, what is the philosophy of the company? And as I am aware, some financial institutions, they may suffer increase of the emissions for some time, but they can move towards the less emitting portfolio going forward. Therefore, they may not sign up with some pledges or initiatives. And I think this report is formulated in a very nice way. So thank you for writing up this report. I think page 7, starting from page 7, and we have types or typology of greenwash, different categories. And HSBC, financial institutions, what they have done, and so on and so forth is being introduced. And I'd like to give you some side stories because you are here from early morning. And Goldman Sachs asset management being fined, page 18. This is a fine being imposed on Goldman Sachs. I was not there. But then when this process was underway, I was at Goldman Sachs Asset Management, and I actually observed this process. So what was happening is that ESG is a good thing. So we have to integrate ESG. So that was the thinking of the company, and they tried hard to do that. But on the other hand, it wasn't as if they wanted to go ESG all out. And as a result of that, they were fined. So I think we are on the watershed moment right now. In the past, there was no expertise. We didn't know the regulatory framework. And then companies were just doing what they believed to be good. But then now we have those examples and we have more expertise. And the question is whether you really want to do greenwash or not. So the company, the product, and also the management integrity is now being tested. So I think we are at that moment that we have to draw a line between these two questions.
Incredibly valuable. I want to turn to Miyake-san. You were a member of the high-level expert group, the UN high-level expert group on net zero commitments of non-state actors, which the Integrity Matters report, I think, is very important. Do you find any notable differences or gaps in the greenwashing debate in Japan and other countries?
はい、ありがとうございます。
Thank you very much for that question. So in 7 months, we put together the report of this high-level expert group. So we had a really intense discussion at that time. And for the first several months, what I thought was Antonio Guterres, Secretary General of the UN, he said that we have to address this issue of greenwash. So this was the awareness of the problem. And then the title of the report said that what constitutes net zero? And then we discussed what constitutes net zero and what was the biggest gap between Japan and the rest of the world. And then this is a rule of thumb, which is a basic thing, which is that whether this is 1.5 degrees or not, at the end of the day, what is being asked is whether it is aligned to 1.5 degrees or not. And what does that mean? That is not really being discussed in Japan. Maybe not just in Japan, globally such a discussion is still short or lacking. So what it means to be aligned with 1.5 degrees, that is not fully discussed in Japan. And if you are not aligned with 1.5 degrees, well, you may be accused of being greenwash, or you are not on the pathway anyway. And whether your pathway is right or not, that is based on whether you are aligned with 1.5 degrees or not. And of course, this is a difficult discussion. We don't have all the data from all the sectors, science-based. That's not the world where we live in. So it's not easy. But then we have to go closer, at least, and discuss how to get closer. And for that purpose, what kind of data is needed, how to compare. Such investigation, such research has to be done. So that is the current situation in Japan. So our response to greenwash, in that sense also, I think we should stick to that philosophy or idea. I think that is kind of the rule of thumb we are following right now.
Turn to regulation, and maybe a question for Ikeda-san. In terms of the regulatory measures that Japan has passed a couple years ago or even recently, you mentioned the ESG fund rule, but either that one or others, what has been some of the more effective, impactful measures that you have passed in your view?
Right. Well, it is very difficult to single out which measure was impactful in terms of addressing greenwashing. Rather, I would say we are trying to construct a certain ecosystem for addressing greenwashing. So it requires layers of regulations to address that. As Kobayashi-san said, well, there needs to be a certain level of scrutiny to the sustainability reporting. So that is why we are moving towards mandatory sustainability reporting rules. As Kobayashi-san said, we made mandatory the sustainability reporting already, but we have not specified which standards the company should abide by in reporting sustainability issues. So, well, we have taken a certain gradual step, but we aim to specify standards in line with ISSB. So that is the kind of direction of travel that the Japanese regulators taking. And not only those reporting issue, well, in every single act of kind of advertising the greenness of the activities, well, there needs a certain level of scrutiny at the internally at the entity level. So and well, again, in producing certain financial reports or providing a certain earnings guide, there are certainly steps to be taken to make sure that those numbers are genuine, correct, and reliable. We need to establish an ecosystem that the claim of greenness will become will be treated in the same way as we treat earnings. So I think that is basically the direction travel that regulators around the globe are taking, I believe, and actually the certain categorization of greenwashing in this report, I believe, certainly corresponding to the needs of certain regulation. So well, for the brand greenwashing, we will require certain governance and internal control system for claiming greenness. For financial reporting greenwashing, we will introduce a mandatory reporting system for sustainable issues, so on and so forth. So we need certain layers of regulation to address greenwashing, and that is still in progress for completion. But it's certainly the trend that we are taking. But at the same time, I would like to add, but at the same time, for the investor side, you should not too naive to believe that because even if earnings figure is produced with that kind of level of scrutiny, there are certain occasions for the revising that earning forecast. So there need to be a certain kind of sense of kind of suspicion, and I don't doubt, and the sense of caution on the side of investor, and not so much surprised when that certain revision made for the certain green claims. Of course, that will keep some investor off the, investing in that particular entity, but that is a natural force of the market equilibrium. So, well, I hope that the green claim will be treated in the same way as earnings or earning forecast, and that is probably the proper function of the market in the end. So.
Thank you. I love the ecosystem of regulation and the need for diligence. Kobayashi-san, can you provide some scenarios where a financial institution could potentially be held liable under current Japanese laws in connection with greenwashing?
でございます。金融機関がグリーンウォッシュに関連して
In relation to greenwashing and the scenario in which the financial institutions are held liable, there are three major cases. One is that and by providing finance to greenwashing companies, helping ultimately greenwashing of those companies. If the investors do not know such things, then they can be part of the victims. But if the securities company do not conduct their due diligence of the product and then sell that green bond to retail investors, and when it's become clear that this product does not have any greening function, and then the securities companies, since they are selling the products to the retail investors, they may be held liable under the Financial Instrument and Exchange Act. And the second is the financial institutions themselves create products that may be held liable as greenwashing. And the administrative actions from the FSA may be taken, and we still have not had any clear standards in dealing with such cases. However, if the prospect of the product creates the expectations that the certain green activities will be conducted or serve the purpose of the greenness, but if it's found out that it's not the case, then the securities companies may be held liable. And in terms of the reporting, for example, integrated reporting, there will be increased possibilities for litigation. And based on the Companies Act, the shareholders may, bring some litigations to hold the board members accountable.
Kobayashi-san just offered. On the, just kind of looking forward, in terms of any advice to financial institutions who want to limit their exposure to greenwashing risks, Ikeda-san, you touched on this in your earlier remarks, but if there's anything to add, I want to start with you and then maybe go down the line.
Yes, so as I said before, securities reports, as Kobayashi-san said, accompanied with some responsibilities and liabilities. So we have that legal framework. So under that, each individual financial institutions and companies must conduct the due diligence of the numbers, which will be put into those reports. And on the same level, the same level of scrutiny will be required in terms of greenwashing. But as I said before, in the beginning, that was the intention, maybe, but especially with financial institutions, the investee companies' actions are also required. And that if there is no progress on that side, so in such a case, how do you provide the updated information to the market? And that's where a certain level of integrity is required of financial institutions. So as I said, the revising the earning forecast, the Japanese companies are especially reluctant to do that. But I think companies should not be afraid of making revisions and should make full explanation of these are the reasons why we were not able to achieve such and such. And this kind of continuous efforts are needed, I think.
Yes, I'd like to mention two things. Of course, financial products. Those companies are producing financial products, what can they do and how they should avoid greenwashing? I think the level of the knowledge needs to be enhanced because they don't really intentionally want to do wrong things. I do believe so. It's just because they don't know. Therefore, unintentionally, they do greenwashing. That is in many cases. Of course, they shouldn't just be freed without being accused. But I think it's very important for them to have more knowledge to begin with. So what often happens in Japan is that according to Japanese rules, and this is the common sense in Japan, so the kind of the common sense or matter of the facts in Japan, oftentimes Japanese companies cite those things. But the climate issues and climate challenges, they employ global international language, universal language. Therefore, information disclosure needs to be in line with the international standards. And the facts actually change. The answers today may not be the answers in 5 years, so that can be a difficult issue. Therefore, the facts need to be updated. And then, based on the current facts, they have to produce the financial products. And another one is, I don't really have a financial background so much. I was working for a retail company, and it was the same. There was the kind of a labeling law, and oftentimes companies can be punished because of what they claim is different from what they actually sell. And of course, producers of the product, they have to be careful, but I think education on the part of the consumers is also important. Consumers, or those who buy the product, need to be able to have enough knowledge to make a judgment whether what they are purchasing is green or not. So I think it's both ways, knowledge on the producer side as well as on the consumer side. So such continuation of the education is required in order for us to move towards the right direction. So yeah, I am relieved that I come after Ikeda-san and Miyake-san, and I can't agree more. And let me just refer back to this guidance, page 27. Integrity and green. And on 29, walk that green talk. So I think philosophy of the company and the action of the company need to be aligned. And in the financial industry, I think the scrutiny or due diligence of the products, investment product, is very important because things change. They have to handle very complicated data, and also PRI, responsible investment, active ownership is also very important to have active engagement even after purchasing or making investment. And also consumer education, and if you think about financial education, we often talk about NISA, that is the Japanese system, so kind of encouraging consumers to make investment. But whether a certain investment is greenwash or not, we need to raise the awareness on the part of the consumers so that the consumers will shift from saving to investment. So we need to have such momentum, and the positive awareness raising activities are needed. So rather than making the consumers afraid of making investment, we need to go positive. And in terms of expertise or knowledge, oftentimes Japanese financial institutions, they want to enclose all the information, and they try and educate their full-time employees, but then it takes time. And things are changing very quickly. Therefore, those financial institutions need to talk to lawyers or NGOs, those expert knowledge that is available outside of the company and organization. So that's something needed. And finally, in terms of supervision of the financial services agency, and I'd like to disclose one personal story. I spent 20 years at Goldman Sachs, and then I was responding to auditing, and those auditing, it's planned. So it's not as if all of a sudden your product is being accused of doing wrong things. So the company's track record, the company's usual practice, all of these matter. And then whether the ESG investment this time around is the right thing or not, that is the question being asked. So it's not just the question of greenwashing. I think the financial institutions need to upgrade themselves in general. So that is something that where I would like to make further contribution to. So what I think is very important is appropriate disclosure, not just their financial reports, securities reporting, but more broadly speaking, disclosure is the most important thing. So a reasonable enough amount of information that is good for investment judgment, I think that is being required of. But then three things you have to be mindful of. One thing about disclosure is that things are changing very quickly around disclosure, not just Japanese laws and regulations, but then international organizations, they come up with new standards, and you have to always keep pace with such development. ESG world, things are changing very quickly, so you may not be able to keep pace. Therefore, you have to look at the standards, soft law of international organizations. And I think those market participants are trying to come up with best practices. Because they are soft law, not observing them do not constitute a legal violation right away, but then they are best practices. So as long as you observe those best practices, I think financial institutions are being considered to fulfill required responsibility. Now, talking about the data provided by a third party, as a gatekeeper, financial institutions should not simply trust and believe the data that is provided by a third party. They have to scrutinize such data, or just cherry picking the data that is convenient for the financial institution, that has to be avoided. And then a third party provided data, and what are the assumptions of the data and limitations of the data, all such needs to be disclosed. And the data provided by a third party, financial institutions are not routinizing the data directly, so oftentimes they incorporate a disclaimer saying that the integrity of the data is not their responsibility. But if the data is inaccurate clearly, and if the financial institutions think that the data is wrong or mistaken, and they are aware of it, then even if there may be disclaimer, they will still be accounted for. And talking about the future proactive statement, of course, this means uncertainties always attached. Therefore, it doesn't right away constitute false information. But it doesn't mean that you can just write about anything about the future, because that way you lose confidence in disclosure. Therefore, if you'd like to talk about the future, you need to have reasonable assumptions there. And what are the assumptions there, and what they think about the future, they need to clearly disclose that. And after the revision of the disclosure guidelines, important future information that can impact the investment judgment, if that is not included intentionally, then that can be considered false statement. So that is now written in the guidelines, so companies need to be careful with that.
And then we'll open it up to the audience. This question of transition finance, and I want to apply the conversation we've just had on the transition finance and the kind of emergence of this, not only in Japan, but globally. So obviously the Financial Services Agency in Japan and METI and the Ministry of Environment have put out various guidance on this matter. The most recent guidance directs financial institutions to follow up with the transition finance fundraisers where, I quote, assumptions underlying the transition strategy change, including where progress against transition objectives falls short of what was expected during fundraising. So a question for all of you, starting with Ikeda-san, is what is your view on how investors should approach the follow-up dialogue with these fundraisers where there's a failure to achieve meaningful progress against their transition strategies, particularly where there's for example, an assumption in relation to reliance on technologies?
Thank you for that very difficult question. Well, I would say when some entity fails to deliver the results according to their commitments, well, outright kind of denial of any continued provision of finance to such entity maybe too harsh, but well, it depends. But I would say the willingness to take a corrective action for the failure and the likelihood of achieving that corrective action and so those factors also should be taken into account in deciding the continuation of the provision of finance to such entity. And often case, it's a very difficult decision, but I think, it is a matter of trust. So it requires I think the collaboration between the financial side and the finance side, and as I repeatedly said, if the financial side cannot convince itself that the commitments, kind of revised commitment, corrected commitments by the finance side can be trustful in terms of the kind of other metrics, such as the commitment to earn something or deliver certain earnings and other types of metrics. I think those kind of other factors and the greenness claims will be probably important. So with getting relevant information for judging the kind of genuinity, trustfulness of the finance side, and there's this reasonable ground to believe that corrective action will be truthfully implemented in the future, then I think that financier should continue that provision of finance. If not, probably should stop. But yeah, it's a very kind of fine, very subtle judgment. So I cannot say with a high level of confidence that in this case this should be done or this should not be done. But a general principle that is the basic guidance that would guide the action by the financial institution.
Thank you for first being the first up to answer the difficult question. Maybe Miyake-san, from your perspective as a financial industry, what would give you kind of reasonable confidence on these matters?
ありがとうございます。基本的には今多分おそらく池田さんの考え方も同じなんですけれども、
Basically, I agree with what Ikeda-san said, but one is transparency. Transparency is what it matters. The commercial readiness and so forth, technologies, of course, and there are uncertainties about technologies, and no one knows for sure. So there is no absolute, confidence in any technology. So that is why you need to challenge. However, the result of that challenge needs to be judged with transparency, with data that backs that up. And that data should be disclosed with a great deal of transparency. That's one. And before it starts, escalation strategy is needed. To what extent you can go providing the finance, but at certain level, then you exit. And so you need to have this escalation strategy. Of course, you need to challenge to what extent you can go. However, of course, there are cases where things don't go well. So if you have the agreement prior to starting the financing, then you can feel relaxed about, to this extent, you can continue to challenge and you can continue to work with the investee company. So the agreement on the conditions about the exit is very important. And from the viewpoint of investors, the investors should be responsible in doing their job. I think that's what really matters. For example, a passive manager who invests in the entire market so that the entire market can be improved, there's one. And the other stock pick asset managers. And the passive manager, in terms of the equities, they can't sell. So they continue to invest in that entity until that company exits from that index. So what the managers can do in such a situation is that the stewardship activities while you are making the investment in that companies, and you raise the level of the engagement. And actually 2 years ago, I was in a panel discussions with such a manager, and that manager was saying that when the exposure didn't move at all, then they said that they are also seeing some shareholder proposals. So the escalation tools like this one should be used. And of course, they should not be afraid of utilizing such tools. And that's my expectation of institutional investors. And also, another is the divestment. Of course, if you judge that the investee companies will not be really improving at all, then you can divest, And that means that the other companies financing cost will increase, right? So earlier, I was trying to speak more about the encouraging aspects, and that's my expectation too. But what we need in Japan is that the capitalists should have the pride as capitalists and act with that pride in a practical way. Another one is the science, which attracts a lot of attention, and also data also attracts a lot of attention. In this field, financial institutions have not really had a really high antenna to catch, the information. And I think individually, I think that this is the area where the financial institutions should work more, and the science. And I have been running this at NGO, which combines the finances and the science. And for the science side, what needs to be found out in order to, improve the entire thing. So this kind of collaboration between scientists and financial institutions is needed.
For transition financing that actually leads to carbon lock-in and increase in carbon emissions. Do you have any warnings for the audience?
トランジションファイナンス
transition finance, there is no, intrinsic nature of transition finance. it's a finance to the transition strategies of the companies. So when you start financing, and you understand the strategies which involve some uncertainties about the technological future, of course. And so you have to do some challenging act. But when situation changes, you need to act in accordance with such changes. And it's a long-term story. And the financial institutions have to have that in mind. And at the entry point, financial institutions do need to understand this is the present best guess, but we are going to conduct the future monitoring in such a way, and this kind of thing should be explained to the investee companies. And the monitoring should be conducted in line with the monitoring plan. And then the proactive engagement should be conducted with the issuers. And if these are followed, and I think there is no big concern about the transition finance.
Just going to take one or two questions from the audience. Okay, I see a hand that just went up. Is someone able to take a...
Please wait for the microphone.
Thank you very much. It's a very great pleasure for me to participate in this very significant seminar. In fact, it's an excellent report. I first appreciate your work, very good work, in fact. I was researching in human security, in fact, and then from this point of view, this greenwashing is also quite important for the future of the human security. So my concern is actually the how we can just trace for this this is a wash or not. It's not so easy to decide the timing or the how you can see the eyesight or scope, because this is an ecosystem. It's not only the one part. This totally you have to consider. So in this sense, I agree the science is important. Not only the natural scientists, but also kind of anthropological, economical, or historical things, because human beings are involved in this sense. So we have to understand what a human being, especially the grassroots level. The 1.5%, that's okay for the global sense, but the people are living in the field and different impact, of course. So vulnerable people, refugees, these are also one of the most concerned in this process. So some sort of a graduation and the policy must be implemented really, practically. Otherwise, just kind of another corruption or another laundering really possible. So how about the strategy for, you said that's a monitoring. Maybe it's monitoring is one of the key. So how to feedback for any sort of idea for the kind of complaints and such kind of, even the regulator is limited. So how maybe the consumers or the investors should be also known, then how to get the reaction. So we have to take good. So I want to know how to some kind of mechanism for all the complemental.
Thank you.
Thank you.
Maybe just anybody have a quick answer to that question?
Yes. I think the connection between the greenwashing and the human security. I think the kind of level of influence that entities or any activity have on the human security is a very important part, and in that sense, guiding principle for the business and human rights certainly put forward a certain concept that how each activity could connect to the violation of human rights, and I think. If we think greenwashing in terms of human security, that concept is very important. And so, well, is it a direct involvement or the indirect or the just influencing through kind of indirect channel? All those things need to be considered, but well, and with that kind of level of involvement with the human security, probably the level of responsibility will vary. So that's the kind of thinking I have in terms of your question.
We're going to, so just on that point, the UN recently did make a communication, a public communication to some oil companies and banks regarding the intersection of human rights, climate change, and greenwashing. So please check that out.